Hey guys, Rob Mitchell here. Thanks for coming in to join us for the Ask Me Anything trading webinar. Um, and thanks for taking a little bit out of your day to come be part of this. Yeah. So this is the first time I've done a Ask Me Anything webinar. I've thought about doing it for a while, and we had quite a few questions. Yeah, and we had quite a few interesting questions, and we had quite a few questions that were really the same. So. As I started brainstorming for that, um, I had a few ideas that I wanted to share with you before we get to the questions, just to kind of lay a groundwork for where it goes with this. Yeah. A lot of times what traders think of trading as being isn't necessarily exactly what it is. And so I'm going to cover a couple of things that um, might help with that. Yeah. So without any further delay, because we do have a lot of questions, I'm going to go ahead and get started. I think we have a lot of stragglers coming in right here. You can check the recording. I'll probably get the recording posted next week. Yeah. So first off, past performance is not necessarily indicative of future results. There's a risk of loss trading futures. Don't use the grocery money for trading. Yeah. Yeah, don't use the grocery money for trading. So, a few key points before we begin. Like I said, who here thinks you could give someone the best trading system in the world and they could still figure out a way to lose money with it without even trying? You don't have to participate if you don't want. So we'll leave that as a rhetorical question. Yeah, if you're not going to participate, which is fine. Right, it's 100%, right? I've been doing this since 1991, futures trading. Well, futures trading came a little bit later, a couple of years later. But there's a lot of reasons why this happens, yeah. So another question, I'll ask the exact same question, but who knows that's true, right? Not do you think, you know it, right? You know it because you've experienced it, right? So, and so from that viewpoint, the way you think as a trader can be much more important than what your trading system can do. And what we're going to cover in here today is going to illuminate that a bit, because we're going to talk about how a trading signal becomes context dependent. In fact, that'll be self-evident, yeah, as we go. So I'm going to focus on how you think about trading and how you understand the way markets work. We had a lot of questions about market structure, which is really at the core of all this stuff. Yeah. What shapes are involved with markets that are going someplace and which ones aren't? Yeah. So it's super important to that you understand this topic that I'm showing you how to think about a problem, about trading, and not what to think. Yeah. So you go to a lot of webinars, they're like, okay, if you just thought this, then everything would be fine. Well, I'm suggesting that if we focus on how you can think instead of what to think, then the how you can think actually gives you options as to how you think in different situations, not just what to think in all situations. Yeah. And that's super important for traders. Yeah. So webinars that tell you what to think are not likely as good as ones that tell you how to think about trading. Because the one can give you choices and the other might not. Not necessarily that. Hey, Ron. I think I've got something in here on a slide about that. Pretty close here. Fact of the matter is, most traders think wrongly about trading and what it really is. That only took me like, what, 30 some odd years to figure this out. Yeah. So you've heard 95%. There you go. Here you go, Ron. We were thinking the same thing. Yeah. You've heard 95% of traders lose. I actually think it's worse than that. No. The traders that make money think the way I'm going to show you today. Now, it may be possible to not think the way that we're talking about here and be successful, but this is the way that I know to be successful. Yeah. You could, conceivably, I mean, I see it all the time. The people that really don't know just do well. Yeah. So that's a whole nother interesting subject. So, but this is the way I've helped traders to be successful and see them have success is by the kind of things that we're talking about here. So now if all this were true, that the way traders think about trading prevents them, you can flip that on its head the way we've been saying it. The way traders think about trading may prevent them from seeing the truth about it. Then if that's the case, that means you have a belief, yeah? That means you have a belief about trading. And how easy is it to change a belief that you have? How easy is it to change a belief that you have without any external help or influence? Well, the way you have to do that is like with a jackhammer, yeah, or a bulldozer, yeah. But if you get thinking the right way about it, then the beliefs that don't serve your trading can go by the wayside very easily. Yeah, very easily. So if you became aware of this one way of thinking about your trading, how might it change everything else in your life in a positive way? And that's something to seriously think about because it would change pretty much everything. Yeah, so the way that, you bet, Ford, my pleasure. So the way you think is really, I had a trader tell me the other day, he said, this thing about the psychology that you talked about was just really an eye-opener for me. And I could only really think of one thing. There's your consciousness, yeah. And there really isn't something out there. These charts are something that's in your mind. Because if you think about it, all the pixels that are on a chart, it's like some insane number of pixels on your chart or different patterns on your chart. I'm astounded at all the different patterns that you can see. But the best thing is that you see one of them the right way, and you'd be successful. Yeah. It's not knowing a lot of things, it's just knowing one thing that can help you to trade successfully. Yeah. So I found this methodology that I'm about to share with you here to be very, very useful. I break a problem down. I just presume, now, not all problems have 4 poles. Got to be careful with this. But there's usually 4 poles in a problem. So when you solve problems about trading, usually there's 4 poles. Yeah. So, you got long, you got short entry, and you got a short profit taking, you got long entry, long profit taking. That's 4 poles. Those are your most basic poles, yeah, that you're dealing with if you look at the market that way, yeah. So earlier we started talking about systems and losing with the best system in the world, right? So what are the 4 poles that would be there? Just using what we're already talking about as an example, yeah. So you got a great system and you lose, yeah. You got a great system and you win. This is the scenario we're talking. You have great systems of like 100% winners, and the guy still figures out how to lose. Great system, win. Yeah. Lousy system, and most systems are. Lose, and bad system, win. And I just kind of alluded to this guy right here. No matter what happens, this guy wins. So, so how many of these, in how many of these scenarios do traders really win? Yeah. In how many of these scenarios? And the real answer is basically 1. You could argue with me about it. We're not here to like argue about it, but basically on this particular 4 poles, you got 1 out of the 4 that really works. Yeah, you could go back and look at it later if you want to and think about it. There's a lot to think about with this kind of stuff. 4 poles, yeah. So this is why traders lose, because they're batting 25% and they don't even know it. I said show the matrix on here. I started to make a matrix on it, but I went back and I just made it like this. Great system, lose. Great system, win. Bad system, lose. Bad system, win. Yeah. So, so how do you flip all this on its head and make it 75%? Yeah, because there are four pole problems that will do that. Like, here's an example. Let's say you have a targeting system and a method that works that it's actually something that you can accomplish. Yeah, something that you can actually do. You know for a fact that you can execute those trades. Because that's another problem that a lot of traders get into with the trading system is, or their approach or their strategy or whatever you want to call it, their signal, yeah, is that on paper it works or on charts it works, but they can't actually do it because they're operating in the past tense is usually the problem. Yeah. You have to be able to do the thing in the future. You have to actually be able to place the trade before the setup is completed. Yeah, and that requires a certain kind of thinking. And we focus a lot on that. Yeah, a lot on that. You have to be in the future. Yeah, and if you're not in the future, you got a problem because the past tense or the present tense on a chart is actually past tense, generally speaking. Yeah. So here's four poles in the equation for that. You got a targeting system, a method that works so that you can actually do it. Okay, you're kind of on your way. Yeah. So what are the four poles here? A target hit and you have a gain. Target not hit and you have a gain. Target hit and you have a loss. Target not hit and you have a loss. Yeah, those are the four possibilities. Yeah. And you don't even need to think about these. You just a target not hit, target hit. Two of them will say target not hit, and two of them say target hit, and two of them say gain, and two of them say loss. So it's pretty simple to do it. You don't even have to think after you do it a few times. Yeah, you can kind of get it. So that third one, what's that third one? Because you got a system that actually works it, the target hits and you have a loss, that can't really happen. Yeah, it doesn't really happen. So what you end up with is because this one doesn't really happen, you end up with a 3/4 advantage in a four-pole problem like this. Yeah. And so I thought I'd share this because this is very usable, easy to do, after, like I said, after you do it a few times. But just learning to identify what the poles are in your trading problem is a huge game changer for most people. Yeah, because most traders don't recognize the other poles, and that's why you fire trade and it immediately goes wrong. It's because you're not aware of what the other poles are in the equation. Super important. You know, a signal is one thing. You know. So doing a matrix like this, it can really help you see how the problem stacks up. And so how do you achieve that? Probably not with a trading signal alone. Yeah, the trading signal is part of the bigger picture, but you need to know something, and that something is the context. Yeah, so we're going to move towards context a little bit here. You know, and what context might be. And I'm just doing like broad stroke things here because I don't want to lose track of the questions that we're here for. Okay, so so that you do the right signals with the right situation. Yeah, that's where you want to start from. Right signals, right situation, not just right signals. And that all goes back to, like I said, market structure is the most basic way of understanding that. And I'm going to describe some of that in a minute. So how can you know something that makes trading work in your favor? Yeah, you know, that's really what we're getting at here. Yeah. So if there's any questions at this juncture, because I'm going to start getting into to the questions. Yeah. I'm going to start getting into the questions that were submitted here. Yeah. If there are any questions before we go to that juncture, then I'll go ahead and start jamming into it. Let's see what I put here. The reason I covered these topics to this point is because it related to the core questions. Yeah, we already just said that. It's hopefully gives you a little bit of a framework to hang the answers on in your mind so that hopefully you get a little bit more out of the webinar. Yeah, that's the idea. So how do you define market structure? Okay, different scales of it. What's a minimum structure, and what is what I would call an invitation, and what's a 3-dot pattern? What's inside and outside? Okay, so what I'm going to do here is I'm going to, oops. Yeah, how do you define market structure? So I'm just going to go out of this. These are some charts. What I'm going to do, I'm not going to use this chart because it might be confusing to have all that stuff on there. So what I'm going to do is I'm going to put up a crude oil chart, and I'm going to use a Smart Super Renko, and I'm just going to do a basic Smart Super Renko. I'm going to put like 3 days on it. Okay. And so I'm going to use this as kind of my workboard. Okay. So, and today is like horrible, a horrible day to be doing this exact kind of a thing. So the basic idea here is the following. The most basic market movement goes like this, okay? And you can break this out into a couple of different things because you make an extension. So I call this A, B, C, D. You could call it 1, 2, 3, 4. I think, yeah, you could call it 1, 2, 3, 4. I call it A, B, C, D. So I'll map this over onto here. A, B, C, D. Yeah, A, B, C, D. And then you go E, and then you go F, and then you go G, and then you go H, and then you go I. Yeah. And then it doesn't make a new high. Yeah, doesn't make a new high. Yeah. That's your basic structure. Now, there's a difference between this basic structure. Well, let me do that in a minute. There's another thing that you could have here too. This could go way down here like this, and you get these kind of V reversal kind of things. Yeah. Yeah. So this would mean that the overlap is a large amount. Okay. But usually a market that's trending, the amount of the retracement is small compared to the extension. Yeah. And John Murphy, if you'd ever read any of his books back in the day, he called that translation. He called it translation. Yeah. The amount of time that's being spent going down is a lot less than it is going up. Yeah. So we've actually turned this into a science, and particularly with these bars, because you can look at it this way structurally, but we also have other ways that you can look at it, what we call a pivot retag. Okay, so if I take these all off of here again, screenshot that if you want. A, B, C, D, E. A, B, C, D, E is your basic structure, but savvy traders or experienced traders can trade on the ABC. Yeah, can trade over in here. Yeah, when you first start learning, mostly you trade over in here, and that means your risk goes up a little bit. Yeah. Now there's another factor that we allow for this, and that's called the 5-tick trap. That's where this guy comes down and it actually takes that out by a little bit. It takes it out by a little bit. Yeah, we call that a 5-tick trap. And as long as it doesn't take it out by more than one complete continuation bar, we just call it CB. Yeah, it doesn't take it out by more than one complete continuation bar. Yeah, so, and I'll use the tail for that. So that kind of a situation, this is going down, this one's going up, but A, B, C, D, and then this comes back and it does a 5-tick trap, we call it, to this structure. We'll say that this structure is still intact if it doesn't go any further than that. In other words, we call this defended. Now, when I use that term defended, and we're going to get into these subjects a little bit more, when I'm using that term defended, I'm saying that there was somebody else there that prevented this from going higher. And when I say someone, I mean someone. Yeah. Now, it's actually a plurality of people. It's not a someone, probably. It's a plurality of people that defended this level here. Yeah, defended this level here. I'll call that a 5-tick trap. And so this is my kind of prelude into thinking of the market as people. Yeah, as people. Yeah. So we've got our basic structure. Now, what's another thing, I won't erase this off of here if I can get these things off of here. I'm going to take these off underneath here so it's a little easier to see. So this, when I talk about this, I'm talking about this structure. I'm talking about what's on, or what I was going to say is, if I count this point here and this point here and this point here, now when you first begin, you do it this way. I went for a long time without being able to allow myself to do that. Once it did that, I was like, I didn't do it, and then it occurred to me that those were some of the best opportunities of all. Yeah, but when I go A, B, C, D, E, what do I have here? Somebody asked the question, oh, could you cover a 3-dot pattern? Yeah, well, 3 higher green reversal bars. Yeah. If we allow for our trapping rule, yeah, the 5-tick trapping rule, we have 3 lower red reversal bars, and that is lower from the top of it anyways. Yeah. 3 lower red reversal bars. Could I have looked at this and said this is 3 higher green reversal bars? I could have. Yeah, but generally I won't do it that way. Yeah, generally I won't. There's even a rule, if you allow the 5-tick trap in the counter, that you could call this 3 higher green reversal bars, but I don't recommend that you go there to begin. For 3, I recommend that you say 3 higher green reversal bars, 3 lower red reversal bars. Yeah. No. Let's see if we can find some others. 3 higher green reversal bars. No. 3 higher green reversal bars. 3 higher green reversal bars. 3 lower red 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 reversal bars. Yeah. So if you just, what's another way that you can understand it? Green, 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 red, red, red on the bigger bars. Yeah. So like if you can train your mind to just be able to see that. Now, what is this? I call that a triple. I love triples because triples almost always reverse. Triples almost always go. 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 Let's see if we can find a triple. Triples almost, well, no, that triple didn't go. It went for the other one. Yeah. Triples almost always go. Triples almost always go. Yeah. I could get into a bunch of other stuff here, guys, but I won't. I'll just keep it simple here. Okay. Any questions on that? This is your basic market structure. You can have more or less overlap. You can be wider. Yeah. What would be the horrible case? This retracement turns into this consolidation thing before it finally does that. I'm an impatient trader. I'm going to start a website called The Impatient Trader. You know, I don't like doing that. You know, but sometimes that's the way it plays. What does it mean when it does it that way? It means these guys are defending here. Yeah, these guys. Yeah, we're going to get into a little bit more advanced on that in a minute. Okay, so let's go to the next one in there was what's an inside and outside view. Okay, so if I'm talking about these extensions, I'm talking about the inside. Yeah, I'm going like this. And when I look at the green reversal bars, I'm looking at the outside of it. But there's also another outside and inside. When I look back to here, there's some group of traders over here that wanted it to go down, and now these guys are going against them. This is an inside structure. Yeah, it's an inside structure. So this is the same thing that happens here. These guys drive it down, and then you get multiple legs going inside. Yeah, yeah. And part of this is related to the depth of it. And so this market's kind of doing consolidation in its own way. Today in this market was fairly complicated for a big part of the day. Became pretty clear over in here. So so that's your basic market structure idea. And when a market starts cycling like this, it's an invitation to those who know. Yeah, we're recording. Yeah, because I'm realize I'm throwing a lot of information at you, so that's why we record these things. Yeah. So, but like I said, it probably won't be posted till early next week sometime. Yeah. So So these are your basic market structure ideas. In the beginning, don't make it all complicated and stuff. Just use the simple A, B, C, D. Use the simple green, green, green. Are they higher, higher, higher? Yeah, for your basic market structure. That is the same thing as a 3-dot pattern on your trap trader oscillator, which I'll cover in a minute. So there's another way of looking at this. An inside part of it is you make an extension, you come back and you pivot retag. What's a pivot retag? Pivot retag is where you tag back inside, go like this and you come back inside here. Then you make an extension, you come back and you touch. You touch and you go. This is not a pivot retag. Yeah, this is not a pivot retag. In strongly moving markets, very often you won't get. But I'm going to discuss in a little bit how you can understand in a market condition like this, who is dominant, who's controlling the activity. Okay, let's, no, don't do that. From the current slide. Okay, so we just covered all this. And when a market's going ABC cycling, savvy traders know that that's an invitation for trend continuation. Yeah. So next I had here, we're going to connect this market structure with the trap trader oscillator and the smart momentum, divergence and convergence. I'm going to do that very briefly, and I'm going to consider A, B, C, D, and I'm going to redo the 3-dot one. Okay, so I'm going to throw trap trader oscillator on here. Just a simple trap trader oscillator. I'm going to add it on there, and I'm going to add the momentum on there. Okay. And let's see, is this a histogram? Dot solid. Let's see. I'll apply the template. We'll use a histo. Okay. So it's easy to see. Okay. So this is a basic basic thing here. If we're going to look at a 3-dot pattern, I will put this on traditional because it's easier to see. Okay. We'll put it on traditional TTO because it's easier to see. Okay. So what's a 3-dot pattern? We just covered 3 dots. It's green, 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 right? Well, 3 dots is just where you get 3 dots going higher. 3 dots going lower. Now, I generally prefer that you do them with the trend. 3 dots. This was the structure we were talking about there. Yeah, 3 dots, then 3 dots. Get this breaking pattern. Be careful. Be careful. Then you pick up 3 dots going down here. On the triple. We talked about the triples. Yeah, you could just make your whole lifestyle out of figuring out how to trade triples. If you wanted to. So, all right. So those are the basic ideas with the market structure. How about with T2s and on the smart momentum? So what you get here is you get a 5-tick trap right there. And so you come up off of here, and then right in here, this momentum goes lower, and you get a T2 right there. Yeah, a T2 right there. Then this is also a 5-tick trap T2, and I recommended you do not start with those. Then what happens once this? So now we're going to talk about market structure encompassing pattern. Okay, when you get this structure right here, and it goes all the way through it in one run, inside to outside. That's an encompassing pattern. As of this juncture right here, this market is non-cycling. What happens when market's non-cycling from the viewpoint of an invitation to savvy traders? What are they thinking? They're thinking that they don't know what to do. Traders don't know what to do because the market has been dominated by an encompassing pattern. We also call that a V reversal. What's the probability of a V reversal? About 6%. Yeah. So when you get this structure, it's 94% against. Yeah. So be careful of this structure. Yeah. The market's non-cycling. You're not looking for T2s anymore. Yeah. And then You get this A, B, C, D, all this inside, you should be aware it's inside. And then you come over here, do you have a T2? Not really. The momentum's not lower. Yeah. 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 You get a T2 over here, you bet. 5-tick trap T2. How about this one over here? Is that a T2? Yeah, you bet. T2 right there. Yeah. So this, it might not be entirely evident. Okay. It might not be entirely evident, but this pattern, this T2 pattern, has to be lockstepped with the structure. It has to be lockstepped with the structure. That's why we begin the discussion with the structure, A, B, C, D, A, B, C, D, E, etc. And then only then do we do the T2. The T2 is where the momentum is going opposite to the structure. The structure is going up, A, B, C, D, E, F, G. Or I could just start it from here, A, B, C, D, E. Yeah. Or I could start from here, A, B, C. Yeah. I could if I want to. Yeah. Yeah. And then you're lockstepping the momentum with the structure. Now, do I need to lockstep the trap trader oscillator in this mode with the structure? I do not. Why? Because it is by definition lockstepped to structure. Yeah. The trap trader oscillator is lockstep to structure. Okay. So I'm going to do one other thing. If this market's going higher, and then for all practical purposes, I have a quasi 3 dot over here, and then I take out the right edge of it right here, then that is what? That's a T2 on the trap trader oscillator, especially when it comes back in here and goes higher, to the prior one here. Yeah, that is a T2. So it's a T2 here, it's a T2 here. Yeah. Now, if that hadn't done that, then the trap trader oscillator is going with price. So it is convergent, it is not divergent. It becomes divergent here because you have a higher green reversal bar and you have a lower trap trader oscillator. That means there's a pretty good idea that some traders got themselves trapped in here in addition to this. So when the momentum goes like that, it tells us that the cycle is expanding. And when the trap trader oscillator goes like this, it tells us some traders are likely trapped in this structure right here. They got too short. Yeah. So there's all kinds of other things we could discuss there, but those are the basic ones that I wanted to cover for the questions that were asked. Okay. And we covered the 3-dot pattern on the here's another one that I want to talk about, and I think I've got some notes in here about this. You have to be careful about the scale that you're trading in. The scale that you're trading in, okay? In this particular market, or in the ES, for example, a reversal plus a continuation bar on a Smart Super Renko chart like this would be 4.8 in the ES, okay? But on that, I consider a reversal continuation bar pattern to be generally at the threshold of random. That's why these charts are set up the way they are. Yeah. So when you are dealing with structures that are smaller than that, you want to be careful. When you're dealing with structures that are bigger than that, you want to be careful. Now that preludes us into the subject of what is normal and not normal. We're going to cover that in a few minutes. Okay. So let's continue with our questions here. Okay. So just food for thought. Okay. Is structure a cause or is it an effect? Yeah. Is structure a cause or is it an effect? Yeah. And we talked about this, that the structure is telling us what people are doing. Yeah. And so we try to convert that into people. And in a few minutes, I will show you what those groups of people are and how you can start parsing them out and understanding the market movement based on their interactions. Yeah. So we're going to take this a couple levels higher than we are right here. Don't try and take all this as one thing. This is not intended to confuse. I'm giving you food for thought. Yeah, you don't need to have all of this in order to be a successful trader. I'm just telling you how far you can go with this. Okay. So I'm not trying to impress. I'm just trying to give you some food for thought. Which was the whole idea behind this webinar. I don't even ask, I'm not asking you to buy anything. I'm not trying to sell anything to you. I'm just giving you things that have made my life work and the lives of other traders. Okay. So it's part of what the market's trying to do. And this idea, what is the market trying to do? That question in its own scale. Yeah. In its own scale. We were looking at a chart a couple minutes ago, and you have inside structures to other structures. That means the market is dominated from the edges, from counter trend players. That's very different than a market that is trending. Yeah, I could go back and show you what the market looks like when it's trending. In fact, let's do that right now. Today was very counter trend dominated. It helps if you know you're in what kind of environment you're in. Yeah. So any of these are clean trends. A, B, C. You get this inside structure: A, B, C, D, E, F, G, H, I, J. This is a trending market. When the market starts doing this kind of thing, at the point that it starts breaking over here, savvy traders are expecting these retracements, these small R1 retracements, which as I had defined to you as being relatively random. In other words, that's almost like not having a retracement at all. Yeah. So this is what savvy traders, they know when they're in this kind of environment. They know when they're in this kind of environment. Yeah. And they certainly know when they're in this kind of environment. Yeah. That's just trouble. Yeah, you go R1, R1. I'm not doing anything until I break out. Yeah. You go R1, R1. I'm not doing anything until it breaks out. Yeah, just forget about it. Yeah. This is what trending market looks like. Yeah. Beautiful, 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 beautiful. Now, how do you know? So, let's say you get caught in these, you trade this all the way up. Well, we have other ways of knowing when this thing is likely to stop. Yeah, when it's likely to stop. Yeah, then you break down over here. Yeah, and then it's just trending back the other way. You just go, beautiful trend. Yeah, beautiful trend, beautiful trend, beautiful trend. Yeah. Oh, consolidation. Consolidation. V reversals. Anytime you go like 25 ticks, 25 ticks, 25 ticks, 25 ticks, 20 ticks. Ooh, maybe it's over. This sort of thing. Yeah. So, so that's what a trend looks like. That's what the invitation looks like. Today's particular chart was not particularly like that. And the thing is that we figure that out almost before it's happening. There's things that tell us how that's going. Yeah. So the ABCD or the ABC on its own that's not the full story. Yeah. So if you just get market structure, okay, ABC, ABCD, that's not the only thing you want to know about it. You want to know where there's encompassing patterns. You want to know where you're non-cycling. You want to know when you're inside or outside. We already covered that. And these things are answering the following question: what's the market trying to do? And what's the most likely direction for range expansion? Because I will not put on a trade unless I can answer these questions. I just won't. I might be on the edge of knowing the answer to the question. Yeah. I might be on the edge of knowing the answer to the question, but I have some semblance of the answer to these questions before I put on a trade, because I'm looking at what the context is. Now, I'm going to cover in a few minutes, like I said, what are these different groups of traders? Yeah. So a little bit more food for thought. Are markets linear or nonlinear? And the answer to that is, and this is particularly important for the people that ask systems related questions, is that most programming software out there is dealing with trading as a linear problem. Yeah. But markets aren't linear. This goes in different patterns. Yeah. It's only when you have the clean ABC cycling that it stays pretty constant. Yeah. And so the more that it doesn't give you clean ABC cycling, the more nonlinear it becomes, and the more it becomes dominated by traders back towards the inside, not towards the outside. When the market's trending, it's going to the outside. Yeah, and that's why the very best trends are to the outside. They're not inside other structures. And so then I'm going to ask the question again, are the shapes in the charts made by people or something else? And the question is, which people are doing that shape? Yeah. And then the next question would be, do they have anyone against them right now? Or in the path to where you think they may be going? Yeah. Or is everyone on the same side? Because when everybody's on the same side, you're just going to get really clean ABC cycling. And so if you use this kind of thinking that I'm telling you about and the groups that I'm telling you about, and you get a handle on what those guys are doing, it goes a long way towards knowing how this will play out. Yeah, yeah. And so now the simplest way of saying this is the market is telling you a story if you know how to read that language. And the language is shapes. It's a language of shapes, and that's not something that we learned in our third grade class. Yeah. So I generally consider the following groups of traders. Well, the day players, where do they play from? They play from the prior day's extremes, the overnight high, the overnight low extremes, things like that. Then the 30-minute players, that would include 30-minute range extremes. Yeah, it would include, I also consider 30-minute players to be VWAP players. You don't have to, but I put all these guys on I put all these guys on the 30-minute chart. The VWAP players, yeah, the floor pivot players and the profile players. I keep all these guys on my 30-minute chart. So on my 30-minute chart, I can see what the day players are doing, the 30-minute players are doing, the VWAP players, the floor pivot players, and the profile players. And then I'm asking myself the question, what is each of those trying to do based on the evidence on the chart? Yeah. So if I see the market come to a profile level and trade right off of it to the tick, I know those guys are present. Yeah, that'd be an example of it. And so I look at how the market responds to it. Did they overshoot it by 10 ticks, but they're still there? Okay, they're there. Yeah. I presume that they're there. If it's not responding to their levels, then they're not there. Yeah. But usually they will. Yeah. And so the next question that you would ask is there anything in the way of preventing these groups from getting what they would intend from those levels? Yeah. And from there, it's not all too complicated. So let's take one quick moment. This is my 30-minute chart. Yeah, that's my 30-minute chart. I got a VWAP on here. Yeah, I got my second standard deviation, my first standard deviation of my VWAP. This is built right in a NinjaTrader. Okay, this thing is great. This thing is great. What's the probability of tagging the 2SD on any given day? Static 2SD, 91%. Well, shoot, that's worth knowing. Yeah. We have ways of computing if we're going to tag that high. I think today it was like 94% or something like that. Yeah, tag that high. And to tag that low, yeah, I think that was 93%. So when I see the day players reacting exactly to that level within a bar, I know those guys are present. In this particular case, they're present on both sides. Yeah. How about these floor pivot players? Yeah, floor pivot players. S1. When they come off of S1 and they come back inside, what are they thinking? Pivot. Where's the pivot? Right there. Did you see a reaction there? Yeah. Yeah. How about this market profile players? These guys went from coast to coast. They got what they wanted twice. They went from coast to coast down here. They went from coast to coast here. They went from coast to coast here, and then went from coast to coast there. Very edge playing dominated market today. So all these different groups, the 30-minute players, these are 30-minute bars. Do they make the 30-minute bar extremes? Yeah. Yeah. So I keep this chart up, and it enables me to see all these different players all in the same chart all at the same time. And each 30 minutes, I'm not looking at that constantly. Each 30 minutes, I look at it and I ask myself the question, what are these guys trying to do? Two panel indicators, the two panel indicators. This is the trap trader oscillator, and this is the smart momentum. Yeah. Yeah, from IndicatorSmart. Okay. Okay, let's see what else. Oh, on the 30-minute chart, two panels. This is just the range. Yeah, there's just two panels here. This is the smart support resistance, the smart volume profile on a 30-minute chart, and a range in this profile. And this range shows me whether or not I'm meeting ranges on my maps, and I'm going to cover that a little bit in a minute. Okay, so these are the groups of traders that I track. And what I'm really doing with these guys is I'm converting the behavior of the market into people so that I can understand it. Because the market doesn't respond any way different than you having a conversation with your mom. You're sitting there trying to figure out what she's trying to tell you. Yeah. Or whoever. Yeah. You're trying to figure out what they're trying to tell you. It's the same thing. Yeah, okay, the 30-minute players are doing this. Yeah. What's the probability of taking out a 30-minute edge? Anybody know? Those who are in my trading room don't. What's the probability of taking out a 30-minute edge all day long? Well, the average probability of taking a 30-minute edge. Now, the numbers are insane. It's crazy. So, yeah, extremely high. Okay. So if you've got things that are statistically aligned with going to the edge, yeah. Well, I'm going to show you another one with the mega map in a few minutes that the probabilities of hitting these numbers is insanely high every period all day long. I'll show you that in a few minutes. Okay, so what do you mean when you trade from normal to abnormal? In fact, we're getting on that subject right now. Yeah. What do you mean when you trade from normal to abnormal is so important? And how do you know what normal is? Okay, market maps that I've developed show you what's normal at high probability. For example, um, uh, let me take a good example. I'll find an example. I'm going to show you. Okay, so now the academics tell us that the market's random. Yeah. Well, that's the biggest bunch of bunk I've ever seen. If the market's random, then how is it that B period takes out all the way back to, minus 13 period, the entire European session? Oops, I lost it. Yeah. If the market's random, then how does it do that 80% of the time? If the market was random, then the only thing on here would be 50%. Yeah. And when this shows up week after week after week after week after week after week, you get used to seeing it and you just know that the market does that. Yeah. Yeah. Sure, Ford. And I'll also tell you, I'm not sure if it's a daylight savings time or whatever, but that's like midnight your time. Yeah, it's hard to do. One thing I do like about those from your neck of the woods is they're devoted. We've got others in this webinar right now from your neck of the woods. Yeah. And a lot of people from there they use the recordings. So this is showing us what's normal. Yeah. But yet some of these probabilities are 100%. Now, is that a guarantee? Absolutely not. Absolutely not. It's a tendency. Yeah, it's a tendency. So when the market looks like it's expressing to the tendency, then it will tend to follow through to that. So we know what's normal or not. Yeah, we know what's normal or not. I'm going to throw another one up here. This is called the mega map. Okay, this is called the mega map. Now, what this guy tells us, without getting into a bunch of details of it, it tells us what's normal for any given period of the day. So this particular period in the trading room is 49 ticks for a period for the first period of the day. 49 ticks is what we expect. Okay. Now, what we found out is, this is kind of a secret thing, man. What we found out is if it didn't make that one, then that one is not as likely. Yeah. If it didn't make the one before it, then that one's not as likely. So I think today this one here only made like somewhere up in here. Okay. Or I might have had that wrong. I think it made the 65th percentile. Okay. It made the 65th percentile. So I call this an interpolation table. I go over here, it's 65%. I just say it's 65%. And then I go over here and I ask myself, what do I expect in this next period? About 40. Yeah. About 40. Yeah. And it'll hit these things over and over and over again all day long. All day long. I could ask myself, for the interval, -3 to A, what's the minimum I expect? I expect 90% of those 52 ticks. What does that mean? Starting in -3, I have a pretty darn good idea. I'm going 50 ticks by A period. Okay, that's not normal. This is up here, this is a not normal table. Down here, it's a not normal table. This is the normal part of it. Yeah. So what we're doing here is we're taking something that is from a academic viewpoint, it's not normal at all. But it's normal to get these really high percentages over and over and over again. And the maps tell us where those things are. Yeah. So the maps show you what is normal at high probability. Yeah. So what event happens 90% of the time normally? Yeah. What happens 90% of the time normally? Yeah. Well, that's not normal, right? 90% is not, and it's never normal from a statistical thing. But what we've done is we've turned the math on its head and we have made that normal. Yeah. So this is the whole main point of the maps, what's normal or not. Now this morning when the room opens up and the overnight range is smaller than it should have been based on the super map, and I'm only making like the 65th percentile on the other period, that's like warning sign. Yeah. It's warning. Yeah. You got to pull out the robot from Lost in Space. Warning, Will Robinson. Dr. Smith is lurking in the shadows. He's going to sabotage everything. Yeah. So the maps tell us what's normal or not. And if it's not acting normal, then we certainly don't expect normal. Yeah. This is a wonderful thing. Yeah, it's a wonderful thing. Okay. So I'm moving on from this. What's important for me to know about reports? So on this question, I'm just going to throw a couple ideas at you. Okay. I don't believe that anybody has ever, unless they have inside information, has ever timed anything off of a report other than expansion, potentially. What's the problem with timing expansion off a report? Illiquidity. The reason that you get expansion off of reports is because everybody cancels their orders before the report. Yeah. So you get abrupt moves. So if you're like a trader in the ES, you need to know all your report times. You need to know when some bozo, okay, I'll be nice, when some esteemed individual at the Federal Reserve is making a mess out of things by saying goofy stuff. Okay. Yeah. But the report, what I always found fascinating about the report, and it's particularly interesting in crude oil that I believe extends to any other market, is that the report itself, um, is inconsequential. And how do I know that? Because the abrupt volatility change happens exactly at the time of the report and not in enough time for somebody to have actually digested the information in it. Yeah. So how can the market be making an abrupt 50-tick move based on the information in the report when the report was released 6 seconds ago? It's just not happening. Yeah, it's just not likely happening. And so timing something off of reports is not as important as knowing when the times of the reports are and knowing when you may get volatility. Yeah, inside info. Yeah. But we're not privy to that. What I really don't like about these financial markets these days is that, Goldman Sachs has inside information, but we don't, and they're trading against us. For sure, they're trading against us. And if a firm tells you should go long something, be careful, because they're just getting you to buy or sell so that they can. If they tell you to go long, they're selling into your buy orders. No, no, that's an old trick. We'll put out a buy recommendation and we'll sell. Yeah, it should be criminal, but it's not apparently. So that's what's important to know for reports. When is the time? So like you should know when, and like also like if you're trading on the stock indexes, it might be wise to follow like a news wire for. If you know that some stuff's happening with any of the big 6 or 7, yeah, what's that? Apple, Microsoft, Nvidia, you know what they are. So you can look them up. Okay. Can you discuss the relationship between stops and risk? Somebody asked this question. I did an excerpt from the trading room that so many people have told me they like this. Okay. Go to here. I'll tell you what. Let me see if I have it up here. I think I have it up. Okay. I'll give you a link in the chat. Okay. So that we can save some time here. So that we can save some time here. We're 1 hour in. I wanted to have this done within an hour and a half. Okay. Let me find the what's the best stop loss strategy? Get shareable link. And there you go. Okay. Because I'm not sure I can outdo that discussion. Yeah. Like I said, that was an excerpt from the trading room. You can save that for later. By the way, there's a ton of useful stuff for you on the YouTube channel. If you subscribe to it, it will notify you, and you click the button there for it. It'll notify you when we post. Yeah. It's fine if you don't, but if you do, it helps the channel out a little bit. Yeah, it helps the channel out a little bit. So, okay, what else we got here? What's the next question? Okay, can you discuss a strategy for increasing this one was asked today. Can you discuss a strategy for increasing contracts as my trading business grows? Okay. Okay. Here's my best shot at this for you. Take a look at your stats from your trading. Hopefully you have some. Ha ha ha. And be careful about the way NinjaTrader computes stats. Because it doesn't. The way we'll compute stats for our trades are a little bit different than the way NinjaTrader might do it. Trade markers should do it correctly for you. Yeah, if you have trade markers from IndicatorSmart. So let's say over and above your margin, yeah, over and above your margin, that you don't, there's a couple of different ways you could do it. You take your maximum drawdown, yeah, and multiply that. So you do like my maximum drawdown times 2, just to be safe. Okay, so let's say your maximum drawdown like $3,000. Okay, then what you might choose to do is, somewhere around $5,000 or $6,000, you're allowed to increase a contract. Yeah, you're allowed to increase a contract. Now you just doubled up. Okay, so you got to monitor it going back the other way. If you on your 2 lot lose the 3,000, that's why I doubled it. Yeah, because you're doubling up. Now that's going from like 1 to 2, right? So you do the ratio appropriately. I think this might be called fixed ratio. Yeah. But you're doing it according to the number of contracts and the proportion of those contracts that you're doing. So if you're going from like 5 to 6 lots, something like that, then you can increase at a little higher rate. But I find in the long run, the tortoise beats the hare. Yeah. So for every, 5,000, pick yourself a level and then adjust it as you go with the more contracts. We've got a guy in the trading room started with 2 contracts and trades 20 now, which is the maximum allowable by NinjaTrader in one account anyway. Yeah, and it took him 8 years to do that. 8 years. But you should also be seeing a commensurate increase in your skill level as you go with that as well. Yeah, they should go together. So hopefully that's helpful. Now I know that the person that asked this question is present. I had some people reach out to me and tell me they couldn't make it from some unforeseen business. But if you have any other questions on that, that would be my number 1 strategy for doing that. And that's pretty much purely algorithmic. Yeah, pretty much purely algorithmic. It doesn't take any intuitive insight to do that. Yeah, you bet, Ira. My pleasure. Okay, what do we got next here? Oh, okay. This is a huge one. Okay, huge. Why do I keep repeating the same mistakes over and over again and freeze up when I trade? How can I fix that? Not necessarily freeze up. Fight, flight, or freeze. But the same mistake is not just freezing. Okay, this particular person asked the question with relation to freezing up. There's an underlying cause. Okay, now could be a huge topic, and I don't want to turn it into a huge topic right here. I had some food poisoning night before last, guys. Actually, last night I'm amazed that I'm even here. It was so bad. And so I'm not the sharpest tool in the shed today. But okay, so who thinks that they can learn anything while they're in a total state of fear? If you were going to a classroom and you wanted to learn, you really wanted to get a lot out of it, and you would figure out some way to scare yourself half to death before the class in a way that was really emotionally disturbing. Who thinks they could learn? Right, that's not gonna work. Okay. How about if you're angry? Yeah. How about if you're about to take your monitor, rip it off its stand, and throw it through the wall? Yeah. Anybody? You think you can learn anything? Anger's the worst. Okay. So I saw this documentary, man. This thing was like heart-jerking because these guys that were in prison, when they asked them between the time that you did the act that landed you here for life, between the time that you did the act and the time that you thought about it, what was the interval? And they're like 2 seconds. You mean you killed that guy in like 2 seconds? Yeah. And you're in prison for life. It was a 2-second decision that wasn't even born out of any kind of rationality whatsoever. Yeah. And you're in prison for life over something that you actually weren't in control of. Yeah. Okay. How about sadness? You're really sad. Yeah. You're like so sad that even Eeyore from Winnie the Pooh couldn't outsad you. Yeah. You think you can learn anything? You ain't learning diddly squat. Yeah. How about hurt? Somebody hurt your feelings? You're like, Rob, I'm going to come into this webinar. I'm going to make sure that my wife batters me to death before the webinar. Is that because Rob paid her? Not really, just joking. Yeah. Who thinks that they can learn while they're in a state of hurt? You know? How about you're in a state of grief? Let's say you just lost, let's say that you were trading today and you dropped a big 10K. You think you can learn anything in this webinar? I got news for you. You ain't learning squat. No. How about grief? You're in the after effects of loss. In fact, you lost so much that you know that you'll never be able to probably recover it, and you live in that state of grief. Can anybody come up with any scenario in which you can learn under any of those circumstances? I didn't think so. Okay, so that being said, where do these emotions reside? Do they reside in your consciousness? No, the anger just comes out of nowhere. No, the fear just comes out of nowhere. No, the sadness just comes out of nowhere. The hurt comes out of nowhere. Somebody says something to you, you don't even know why the heck, and you feel hurt the whole rest of the day and halfway into the next. Yeah. Then it goes away again. Well, where did it go? It went right back down to where it used to be. These things are operating below your level of conscious awareness. So when you make the same mistakes over and over and over again in trading, whether it be freeze up or just you can't function for squat, you can't execute trades that are like right in front of your face. How can you fix that? You need to bring those things up into your awareness because you can't learn or perform under that circumstance. And there's only one. I've spent the last 40 years of my life working with this for myself and others. In the beginning, for myself, yeah, and then for others. And I developed a course for this, Manifesting Your Future. Now, I know a lot of traders, they think that trading is about clicking buttons. We started this webinar today with on the notion that trading wasn't what maybe everybody thinks it is. Yeah, maybe it's something a little bit different than that sometimes. Yeah, and so this is part of the equation, and it is just the way you think, whether conscious or not, is dramatically impacting whether or not. Well, you're like, well, Rob, I'll just code it up, and we're going to get to that in a minute. Okay, I'll just code it up, Rob, and then all my problems will be solved. No, it won't. Why? Because most people who code things up don't know what their system is when they code it. Yeah. When you code something, you go to the programmer with everything about it spec'd out. If there's something about it that's not spec'd out, I got news for you, you got a problem. At the same time, I will tell you this, the simplest trading systems are the best. Yeah. So it has to be elegant. Yeah. So manifesting your future has been my life's passion forever, 40 years at least. And let's see here. Here's a link for that if you're interested. At a minimum, go in there and get your free ebook, How Your Mind Works. Yeah, you'll enjoy that. I guarantee it. Yeah. Okay. Let's see what else we got. Can you discuss using Shark Indicator's Bloodhound for semi-automation? No, for semi-automation. Yeah. So like everything we've discussed today, we're talking about everything, pretty much everything I've alluded to today. We got a lot of people in our trading room use Bloodhound for semi-automation for getting their trades executed. Because a lot of times that kind of Zen moment when trade's happening, yeah. So you get the context right and everything else, and then you turn it on. Yeah, that is my recommendation for using Shark, and that's the way the question was actually asked. Yeah, yeah. Now, a lot of the indicators that we have developed have outputs specifically designed to feed into Bloodhound. Yeah. They output things like their state. Yeah. If it's above a certain threshold or below a certain threshold, things like this. So it makes programming in Bloodhound pretty simple. Yeah. A lot of it does. Yeah. And so I use Bloodhound mostly as a research tool, and Bloodhound can export or rather trade markers can import directly from Bloodhound. So you code something up, you drop it in to smart trade markers from IndicatorSmart, and then you can do all kinds of analysis on it. Yeah, which is very, very cool. So you sit there with your Bloodhound doing themes and variations in your code, and then you drop it into trade markers and analyze it. Very cool. Very, very cool. I'm not necessarily suggesting or trying to sell you trade markers or anything like that, but if you're taking your game to a high level, that is one thing that you can do with it if you happen to have those tools or whatever. Yeah. So, and so that pretty much covers that. Yeah. I think it's great. I generally have not done that because I find so, okay, here's another subject about this that's super important for those who would automate or semi-automate. I've done a lot of automation and semi-automation in my day, but here's the amazing thing about it. I am not an IP tech person, okay? So to put me in charge of running computer servers and making sure that the stuff's lined up and ready to work and everything else, that is absolutely not where I am at my finest. Yeah, any event in time or procedure is not my thing. So if that works for you, that's great. But if you're a person that doesn't like repetitive tasks or something like that, or making sure, it's like when I did all that trading, we used to run a bunch of trading programs for Robbins, World Cup Advisor and stuff. And that was all like I have to make sure the computer's on. I have to make sure TradeStation's running. I have to make sure TradeStation's sending the signal into NinjaTrader. I got to make sure NinjaTrader's picking up the signal. I got to make sure that it's getting executed, you know, and there may or may not be handshaking. So with it all, so you got to make sure, all this stuff. I'm like, that's not my idea of a good day. Yeah. So, um, uh, no, no. So the question is, do you need extra software? No, you don't. Um, Bloodhound, if you don't have Bloodhound, get it from IndicatorSmart. That gives you a little extra layer of their customer service is great. I love those guys. Been working with them for many years. But uh, if it'd take too long to show it to you, but like the Trap Trader Oscillator has outputs into Bloodhound, the Smart Momentum, you can pretty much grab those. Smart Dynamic Zones has output into NinjaTrader, or I'm sorry, into Bloodhound, etc. And so it makes the coding easier. It's not always easy. It's not always easy, but but um, but no, you don't need anything extra. Yeah. So if you've got Bloodhound, you've got some of these indicators, it's pretty easy to code some stuff up. You know, keep it simple and elegant. Yeah. Best trading systems I ever saw, just a couple lines of code. I don't think this was the end. I'm a little surprised that this was the end. Shark indicators, Bloodhound, repeating the same mistakes. I could have sworn. And we had some latecomer questions here. Strategy for increasing contracts. Um, wow, I brought this in on time, which was pretty amazing since I hadn't. I had a indeterminate amount of stuff. Okay, let's see what. Um, 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 okay, I'll take these in the order received. People asking questions here today. Okay, here's a question that just came in an email like an hour ago. Okay, do you think support and resistance price levels derived from CME options data can give you an edge when trading in futures? Okay, I have no experience in this question, but I will tell you this. The mathematics that are used to derive support and resistance levels are, in my opinion, completely bogus. Yeah, I would use something like our Smart Super day trading targets that's going to be released here in the near future. Yeah, completely bogus. Why? Because they're based on the notion of a binomial distribution in statistics. Okay, so I don't want to, sound all fancy or anything. Basically, if you sit there with your favorite 6-pack of Billy beer, dropping grains of sand on a pile, it's going to distribute into a shape. The entire mathematics of statistics is based on that shape called a bell curve. Okay, the mean, the median, and the mode are the same. The guys that won the Nobel Prize for coming up with an option pricing model, the Black-Scholes option pricing model, if I'm saying their names right, I hope I am. If not, I apologize, is based on this binomial distribution. Why do we know that markets aren't binomially distributed? Well, I think even today, we had a wonderful example of this today. Yeah. What the heck was that? Yeah. What the heck was that? Yeah. That's no binomial distribution. Binomial says that it's random. Yeah. That's not a random event. Okay. That's not a random event. Yeah. Yeah. So markets are not binomial distributed. So not to say that there isn't something there for you, right? It's just a complete bunch of bunk, which a lot of these people that get Nobel Prizes is, you know, I mean, how could you give somebody a Nobel Prize in such a thing unless you yourself were you know, of equal or greater, capacity. I don't know. So I don't have much to say about it beyond that. So I'm not discouraging you from looking at those levels, but let the proof be in the pudding. Yeah. You can't have your pudding if you didn't eat your meat. Go listen to your old Pink Floyd records. Yeah, yeah. Yeah, cause of a few blowups. Yeah. So my advice is, yeah, use caution with that one. Okay. Let's see. Um, okay. Uh, and I have one other here, insightful questions. Okay. This is a really good question, actually. How do you keep laser focus or very high level of concentration over 2, 3, or 4 hours of trading? Okay. I am 64 years old. I can't do it. Mike in our trading room does it all day long. Yeah, all day long. He can do it. Yeah. I can't do it. Why can't I do it? Probably. It's not that I'm 64 years old. It's probably that I don't like doing things that are relatively procedural. And so I'll drift. Want to do things that are, less knowable. I'm always interested in what I don't know over what I do. So it depends on your personality. But going back to the, anger, sadness, hurt, fear, guilt, grief. By the way, why do I give those in that order? Anger, sadness, hurt, fear, guilt, grief. Because for a trader, for each one of those layers you peel away, the next one's under it. You take away the anger, you got sadness. You take away the sadness, you got hurt. You take away the hurt, you got fear. You know, you take away the fear, you got guilt. Yeah. So things like anger defend you from feeling the emotions and make you feel like you have power because anger is directional. Yeah. So anger is at the top of the stack. And then as you go down, you get into like sadness and grief and guilt. Yeah. And so in order to truly be free of these things, you want to clear those things. So it's conceivable that you can't do it because you're burning way more calories, mental calories, than you need to be burning for what it is that you're trying to do. That's conceivable. But aside from that, I think it's a practice. Yeah. Aside from that, I think it's a practice. And so it's something that you work on over time. I think in the beginning, the fellow in the trading room that I mentioned that just, he traded like, he's up in the, before the trading room even opens. Yeah. Trading. Yeah. He's like addicted to it. Yeah. So if it becomes your addiction, so that's another metric. Yeah. If it's your addiction, nothing could stop you from doing it. When I was young, I would do that with no problem. But I've just found as I get a little bit older. So those would be some things to maybe take into consideration. If it's not your passion and it's causing you pain, then you get into the problem of the following. You are implementing discipline on yourself. And discipline is really a bad thing I think it's a really bad word. Yeah. People talk about discipline in trading. When I see somebody talking about discipline in trading, either they're using the term in a different way than I think, or they're just wrong. Yeah, in my opinion. Or I'm not trying to be mean to anybody. Yeah, but discipline is very often where you're trying to force yourself to do something that you don't want, which is where all these issues come from in the first place. So you have to do a little bit of searching on what that might be. Manifesting your future course that I posted a link for above could certainly help you with that. Yeah. Uh, how can anyone executing every trade without any signs of hesitation or even thinking to hesitate? That's a practice, and that has to do with trust. Yeah. I found or have found over the years that people that have issues with trust, The thing that they really don't trust is themselves. Yeah. I'm not pointing any fingers. I'm just saying, that also goes back to the earlier statement. It's all really all in your mind. Yeah. So, um, but you, that's a practice. And, like I said, guy in the trading room, 8 years to get to that point. Am I there? Nope. No. Yeah, he sends me emails sometime and he goes, why aren't you blah blah blah? And I'm like, I'm just not there. I don't know if I ever will be, because that's just not, but he's put every ounce of himself into it with incredible passion. I admire, yeah, I admire it. So um um okay, if for any reason at all the emotions such as greed, fear, revenge, trading um appear during active trading, what's the smartest thing to do besides stop trading for the day? You might not be able to stop yourself from trading for the day if you're in a state of revenge. Yeah. Revenge is a forward motivation. It's anger. Yeah. Yeah. Um, and so you have to clear those things. Now, when I talk about clearing the negative emotions and the beliefs that don't serve you, and then getting your values aligned, consistent with this material that I've been describing here in the Manifesting Your Future course, um, it's not a matter of control. Yeah. It's not a matter of control. Yeah. Yeah. It's a matter of having a collaboration between your body and your mind. Yeah, because most of your unconscious is in your body. Yeah. It's the mind of your body. And they've even found in recent years, like the heart had they have a wonderful story about somebody who got a heart transplant and and the person started having all these cravings and interesting things happen in their life, and eventually they end up on the doorstep of the donor of their heart. Yeah, yeah, and they met the family. Yeah, so don't try to control your emotions. That's the worst thing you can do, because why? Because when you're controlling your emotions, you're expending a huge amount of energy controlling your emotions. So the idea is to get away from controlling your emotions. Now, when I say you're going to clear the negative emotions, anger, sadness, hurt, fear, guilt, you can throw greed in there if you want, um, but when you clear them, it doesn't mean that you don't feel them. It actually means you'll feel them more fully. Yeah. But you won't feel them with attachment. That's where the problem occurs, where you feel the emotions with the attachment that binds you to the emotion. Yeah. And then because you're bound to the emotion, you have no choice. Yeah. And a trader has to be able to have choice. Yeah. It's super important. Yeah, it's super important. So I'd recommend Manifesting Your Future. There is a coupon code, OTR member. Um, we've had 50,000 people do that material. Nobody who actually did it ever returned it. And I'm pretty pleased with that. Nobody who actually did it ever returned it, because there's a money back guarantee. Yeah. Nobody returned it. Why don't they return it? Because it changes their life. And so it's 10 and a half hours of material, and it's something I'll never recover the work the amount of work that and effort and passion that I put into producing that material is nothing compared to what you pay for it. It's absolutely nothing compared to what you pay for it. So anyways, if that vibes with you, go for it. If not, that's fine too. So I'm always happy to help if I can. So any other questions, guys? I think aside from one person who said they couldn't get into the webinar, we had a fairly good turnout today for a Ask Me Anything webinar. And then, like I said, I'll probably have this posted by Tuesday. Yeah, Yeah. So, all right, guys. Any other questions before I go on break? I'm pulling this in right on time. Pulling it in right on time. And don't try and take everything that don't try. I'm not trying to don't try and take everything that I said today and have it all in one thing. If you vibe with it, go with it. Yeah. That's the idea of these things. But these are some broad stroke things that the people that have been the most successful have benefited from. And so I'm just sharing that with you in with respect to the questions that you're asking. Yeah. So, all right, guys, that's what I got for you today. Thank you for joining us and taking a little bit out of your afternoon. And I look forward to seeing you all in the next one. Yeah. Thank you.